The gold price is on a run again, and some people are talking about gold price targets from 3,000, maybe 3,500 US dollar. And now is the time to do due diligence and look for interesting and exciting gold companies with potential to outperform. And one of those company might be with us today. Then I have the CEO of Loncor Gold, John Barker, with me. John, first of all, it's very good to have you. A great share price movement in the last few months.
Yeah, thanks, Jan. And firstly, thank you for having us on. But yes, it's always good to see your share price moving like that.
Yep, excellent. I mean, let's face it. There haven't been really much junior mining companies out there that had a little bit of performance, at least, right? But I would say you really outperformed. I think you're up 50% in the last few months. That's quite something. What is the reason, and is it now too late to buy into the company? What do you think, as a CEO perspective?
Well, let's take the two things. Firstly, why? Well, the reason is relatively simple. We've been marketing aggressively since the beginning of November, the end of October. Yourselves took us through, we went through Europe, and I then went to Dubai to a conference, to London to a conference. I was in Vancouver last week, had over 300 people in the audience. And our story is simple. It's a big resource that's getting bigger. It's one of the highest quality gold deposits out there in West and East Africa. And I think most people would suggest, as we are, that our valuation is lagging. And as regard to whether we still worth investing, well, I would suggest a big yes. And you can look at various parameters there. You could look at the study that we did back in the December 21. It's called a preliminary economic assessment, a 470-page, very detailed assessment. And with that, you get a discounted cash flow valuation. Current gold prices, that values our project after tax using 5% discount at $2 billion. We have 85% of it. So $2 billion times 85% is a completely different valuation to our current market cap, which sits around $65 million. And then I look at different ways to try and give you a feel of our valuation. And another way, I was looking at a group called Endeavour, which is a multi-billion-dollar gold producer in West and East Africa, so a similar area to us. If you go on their website, they proudly say that they've been finding gold ounces, exploring for gold ounces at a cost of finding them at $25 an ounce. We valued at $17 an ounce on our adjusted market cap per ounce. So we actually valued below the value that they're finding the ounces at. And our ounces are high quality and a big deposit, which you just don't find. So again, it's telling you there's a disjoint there in our valuation. So yes, I still believe we've got significant upside from where we stand. Yeah.
That's very interesting. And also, I think we have to outline this, right? Finding an ounce of gold for 25 bucks, that's very cheap. But you're valued even cheaper, and you have not just like 10 satellite projects, you have one big hill, and you have all of your ounces in that hill, if you like. So high quality in a good jurisdiction in Africa. So that's a plus point on your end. Very good. Let's talk about this a little bit more on detail, because as I already said, you have one big project. This is called a Dumby, but you also have one or the other satellite project. We're not talking about 100 km away. We're talking about nearby 10 kilometers away from the main project. And you just released very good drilling results. Can you give us a little bit of a rundown? What did you find there?
Yes, in total, we have 16 kilometers of interesting geology. When I say interesting geology, either historically Belgians had mined there, or local miners had taken small amounts out, or we'd done some preliminary sampling there. And if you go on our website, you'll see we've historically there's been some very interesting sampling, but we've never really had the cash, the balance sheet to explore it aggressively. We started to do some, they call it scout drilling, just popping a drill hole below some of those interesting historic results. And just over 10 kilometers away from Adumbi, our main project, we came out, for example, with one hole Depth-wise, it was above 150 meters, so relatively close to the surface. We had two intercepts, one of 5 meters, one of 6 meters long, and the one of 5 meters had 5 grams a ton, and the one of 6 meters had 6 grams a ton. Early stage, but very, from our point of view, encouraging, because ideally what you want to do is to create a mining district, not just the one deposit. And Barrick, the world's second largest gold producer, has stated previously in presentations the best place to look for a major deposit is close to another major deposit. So as we move forward and cash becomes more available for these things, we will look to do more exploration in these areas.
That's very good. And I think you're also working on a drilling campaign on your main project at Dumby. You want to expand your resource there. Give us a little bit of an outlook. How long will it take until we can see some results?
As we announced last year, we'll be using some of the cash that we brought in from a sale of an asset. We brought in $10 million over last year, US. And we'll be using that money for drilling below Dumby. And we would expect to, we've got 2 drill rigs. One is going below Dumby, another one actually is doing some drilling, shallower drilling. We believe if drilling continues the way it is currently, that we should have results in the second half of next month. And if they're anything like the results that we've had previously on Dumby, then I think we believe the momentum and people will continue to look at the story because they should be fairly wide and high grade. But of course, until we have them processed, we don't know. I'm speculating there, but historically we've had some really exceptional drill holes out of Dumby. So the news flow should continue during the second half of February.
Very good, very good. John, let's talk a little bit about the whole Africa situation, right? You are located in the DRC. You are quite close, as you already mentioned, to Barrick Gold's best, and I think it's the largest gold mine in Africa, the Kibali mine. Actually, I think our viewers know already, AXINO has been involved in the exploration phase of this mine like some 20 years ago, and we had some very good success, meaning we are well connected with the DRC and this region. But we zoom out a little bit, the whole Africa situation, and we can see Mali, for example, right? Barrick Gold is mining in Mali. They shut down the operation. They have a little bit of an issue. On the other hand, Resolute Mining, they are also in Mali, but they are also shareholder of you. So what does it mean for the whole African continent? Does it mean these type of companies will probably have a look on where does mining work very well? Does it push these type of companies a little bit towards you? Is it a plus point on your end? What do you think?
Well, just to go back, Resolute's CEO was detained in Mali, and Resolute had to pay $160 million to the Mali government in what they claimed was past taxes. Barrick also are having issues currently, and obviously I can't speak on behalf of them, but what I can say is prior to those difficulties where the CEO was detained, Resolute were already stating that they wanted to diversify out of Mali. And so, yeah, are companies more likely to be looking at the DRC? Well, we believe yes. Things have really happened in the DRC. Robert Friedland in the South has created a $22 billion Canadian dollar company on the copper side over the last number of years. That's happened. Kibali, as you mentioned, the 6th largest gold mine in the world, as well as the largest in Africa, has been mining for over 13 years, not far from where we are. And I just wanted to touch on it. You mentioned Kibali. They're currently mining at a profit margin of $1,700 per ounce at a similar grade to what we believe we'll be mining in the future and a similar cost to what we've suggested we will be mining. $1,700 an ounce. We valued it $17 an ounce. So again, it's just telling you the optionality in our story. But yes, I think eyes are more and more falling on the DRC, given the fact that projects are being developed. And in the case of Robert Friedland and Kibali, very, very successfully.
Very good. John, in the end, there's one question, and I think you're the perfect guy to answer it, right? Because you're not a geologist only, but you're also from a capital market background. You have an experience, you have been especially focused on analyzing mining stocks also. Give us a little bit of an idea from someone who comes from the analyst side. What are the key points that make Loncor Gold so exciting from your point of view for an investor?
Well, you go back and to looking at basics and management experience. We have almost 30 years of experience on the ground in the DRC, which is essential when you in jurisdictions such as this, with key personnel in the company, having operated there for many years. That is, and then when you look at the deposit itself, you want to look at the size of it. We are getting very close to what they call a tier one project, which would be 5 million ounces, which then mid-tier and major companies become very, very interested. And we've seen quite a lot of corporate activity. The quality of it, which would really is what you call the grade per ton, the grams of gold per ton. And again, if you would look at our recent presentations, you'll see our peer group. We have the highest grade per ton versus over 20 other companies in the East and West Africa. So these are all things when we're early stage that you can hang your decision making on as to whether you believe we've got something that is different to there. And then, of course, from a valuation perspective, well, if you have a discounted cash flow, a DCF, and you can look at that and compare it against others, you can compare it against the value of the company, which I did earlier, and then things like enterprise value. At our stage, the market cap adjusted for cash and debt, creating an enterprise value. And then you divide your resources by that, you get an EV per ounce. And if you look at us versus that same peer group I mentioned earlier on, we're looking extremely cheap versus the likes of Predictive in Guinea, for example. I think they're trading around $70 or $80 an ounce. We're at $17 an ounce. They're a little further developed than us, but you can see again the potential to release. So yeah, looking at fundamentals of the project plus looking at comparable valuations. And I like to think that we stack up in all of those areas.
Very good, very good. John, thank you very much for giving us insight. We talked about the drilling results. We talked about your great, let's say, share price raise within the last few months and weeks. And we talked about the geopolitical situation and the Africa situation. Thank you very much. It was very insightful. And for all the people that have questions, they can come and comment under the video and we will forward it to you. So thank you very much and talk again soon. Good luck with your exploration program.
Thanks, Jan.